You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, first day of February 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That is reserved for members only and those who are taking their 1-week free trial. 9:30 a.m. to 11:30 a.m. Eastern every trading day. Then after a 30-minute break, we come back and do the afternoon broadcast, which is a recap of everything that's happened over the past 24 hours. And this broadcast is open to the public. That's everybody, everywhere, with an internet-connected device. There's 2 ways to join this afternoon broadcast, one a little better than the other. So let me give you the better way first. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and then every trading day going forward, you'll get an email roughly an hour before the afternoon broadcast starts. And at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. Now, it's the better way because you have access to the question box so that you can ask questions and participate in the discussion. If you're out of the office, away from the desktop, running errands, whatever the case, but you still want to join the afternoon broadcast, or should audio drop on our platform, simply point your browser to our YouTube channel, which is really easy to remember. It's youtube.com/CFRN. youtube.com/CFRN. So if you've logged in via our platform and the audio drops, if you just point your browser over there, you'll pick up right where you left off with pristine audio. Okay? All right. Now, not only do we broadcast live every trading day on our YouTube channel, but we archive every daily broadcast. Currently, there's over 2,100 daily live broadcasts archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's really one of the best ways to get to know who we really are, because you can scroll back 6 weeks, 6 months, a year, even 2 years or more, and just pick a day at random and listen, and then either go back further or come back closer and pick a day at random and listen. What you'll find is a thread of continuity, a thread of connectivity that's woven through each and every daily broadcast. Everything that we do, everything that we teach, everything that we offer is based on the underlying principles upon which markets operate. So, that's what you're going to find as you scroll back. Who we really are, what it is we do, how we do it, and even why. So with that said, let's open with a word of prayer. Now, we've been talking this last week about the top 5 success principles of Job. Now, Self-help books are all the rage, from Tony Robbins to thousands of others, but none of them ever endured what Job endured. And while you and I may have gone through some rough times, I dare say none of us in this audience have endured what Job did. But he was a great entrepreneur in his day. Our scripture, Job 31, verses 26 through 28, and I'm reading from the Message translation. Did I set my heart on making big money or worship at the bank? Did I boast about my wealth, show off because I was well off? Was I ever so awed by the sun's brilliance and moved by the moon's beauty that I let myself become seduced by them and worship them on the sly? If so, I would deserve the worst of punishments, for I would be betraying God Himself. Now, some of the things that we've talked about, these success principles of Job, the first one was sexual purity. You probably won't find that in most self-help books today. Yesterday's topic was sharing and caring. Today, no other gods. Job lived in the time span between the time of Noah and Abraham, after the flood, but before God established the nation of Israel. It was also the time before God gave the 10 Commandments. Even so, Job's fourth top 5 principle, with 3 verses dedicated to it, lines up exactly with the very first of the 10 Commandments. Exodus 20 verse 3 says, "You shall have no other gods before me." In the days of Job, the sun, moon, and even the stars were regarded as being of the gods. And with that perspective, let's check what Job himself says. If I have regarded the sun in its radiance, or the moon moving in splendor, so that my heart was secretly enticed, and my hand offered them a kiss of homage. That's Job 31, 26, and you can continue reading in 27. Despite local culture, Job held fast to the belief there was only one God to worship and no other. Even when his culture would have said that blessings came from the sun, the moon, the stars, even nature itself, Job simply refused to believe it. Again, it's as if Job had already heard the words spoken by God to the Israelites some 700 years later. Deuteronomy 4:19. And when you look up to the sky and see the sun, the moon, and the stars, all the heavenly array, do not be enticed into bowing down to them and worshiping things the Lord your God has apportioned to all the nations under heaven. Today you might hear the expression, "Thank your lucky stars." That still resonates with many, suggesting other factors are at play in generating your success. Of course, as a Christian, you know this to be untrue, and so you should stand with Job in worshiping and thanking God for each and every opportunity and success that comes your way. But be warned, this can be more difficult than it sounds. Just as sunshine and weather played a role in Job's success, today's gods of self-help, positive thinking, education, the right connections, fitness, work-life balance, and even more all play a role today. But just as in the time of Job, none of these deserve your credit. Instead, your thanks and worship for any success you achieve belongs only to God. Join me in a word of prayer. Heavenly Father, thank you for showing me that the good things that happen to me are not because of my goodness, but because of your grace. Help me to remember that the difficult things I may have to endure are not always an indication of sin, but can be attributed to Satan, the accuser of my soul. Thank you that in Christ there is nothing of which I can be accused, because Christ is my mediator, whose shed blood cleanses me from all sin, past, present, and future. Thank you that I am clothed forever in his righteousness, and that your grace is open to the sinner and saved alike. I pray that many who are deceived by satanic lies will be set free and come to saving faith in Christ Jesus, my Lord, whose name we believe and pray in. And everybody said, amen. Well, happy Wednesday, guys. Here it is, Fed Day. Now, the announcement will come out at 2 o'clock. Then we'll have a press conference at 2:30 Eastern. Thank you, Lewis. Okay, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Right now, the Dow is down 342 points, or 1%. NASDAQ is down 46. S&P 500 is down 22. The Russell 2000, our man of the street, down 6.5 points. Earlier in the week, I spoke about the potential for lower prices heading into the Fed, and then that giving us a platform for a nice bounce as the announcement comes out. Now, I noted in the discussion group that wasn't a forecast, just an observation, and so far it kind of seems to be playing out the way I thought it would. In the commodity basket, crude oil is down $1.95, trading 76.92 last. That's a drop of 2.5%. Gold is down $6.20, trading 19.39.10 last. Silver down 28 cents, trading 23.55 last. That's a drop of a little over 1%. In the Asian markets at the close, Nikkei posted a gain of 19 points. Shanghai rose 29. The Hang Seng back in the green, up 229 points, a little over 1%. And in the European markets at the close, FTSE down 10, DAX up 52, CAC down 5. When we go to the charts in a little bit, you'll see it's been just kind of a quiet sideways session as we head into the Fed. So, with that, we'll go to Michael, except now Michael's having problems logging in. Let me check with him here in Telegram. Been having some issues with the GoToWebinar platform this morning. All right, he'll be with us here in just a second. While we're waiting, go ahead and take a look. The Logic 247 recap. Valerie posted the recap this morning at 7 a.m. Eastern. Haven't put out any alerts this morning. There's just no commitment on either side as we head into the Fed. Perhaps this afternoon, certainly this evening, will bring us some good opportunities. We're in week 235. Over 235 weeks, we've issued over 13,400 individual handcrafted alerts. All trend trades. No counter trend trades in the bunch. The trend is defined by the 30-minute chart and the BBC. Now, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 29 alerts. 3 never triggered. As of 7 a.m., we were still waiting on 5. So we had 21 actionable alerts, of which 3 or 14% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one private mentoring sessions. Over the last 235 weeks, we've averaged 20% or less of the alerts being stopped out. So this week we're sitting at 14%. Because of market conditions, we haven't posted as many alerts as we might have typically posted by Wednesday, but that's dictated by market behavior and the structure of the market. The alerts are designed to help you learn to find the windows of opportunity yourself. The Logic alerts come out around the clock from 2 a.m. to 2 p.m. Eastern, because futures trade around the clock and we have traders around the globe. So as opportunity presents itself, that's when the alert goes out. And it goes out well ahead of the time when it actually triggers, so that you're able to study the alert, study the 30-minute roadmap chart, understand why that's a window of opportunity, and then you have plenty of time to prepare to actually execute the trade using the smaller time frame of your choice. The 7-tick range chart that we use in the live training room. Some people use a 1-minute chart, some people use a 5-minute chart. Once you become a member, you'll go through a period of training, and as you write your business plan and trading plan, you'll determine what time frame ticker chart works best for you. Okay, Michael got in, but hang on and let me make him a this isn't your name, but I'll go ahead and make you the presenter.
Okay. That makes me the presenter. Does it make me an organizer too? Yeah, I guess it.
Yep.
It's got Jake. It's got Jake's name in there. That's weird.
Yep.
Maybe that's why I couldn't log in. All right. Well, anyway.
I sent you the login credentials in Telegram.
Yeah, I know. I was able to use those. It got me into like a weird place, and it's just not acting right. I'll figure it out because I have a meeting I have to schedule for right after I'm done. So I'll figure it out. From my end, I'll figure out what's going wrong on my end. All right. So here we go. Are you ready? You should see my screen now, right?
Yep, you're good to go.
Okay. Here we go. Good afternoon, everyone. Today is, I believe it's Wednesday, right? Yeah, Wednesday, the first day of February, 2023. if you've not taken a free trial, let's go here to mytradingiq.com, and right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. And when you click on that, it's going to bring you to this page right here. Hopefully, yeah, this page right here. Just fill out this form. Once you fill out the form, you'll be sent everything you need to get into the room in the morning. Okay, we're going to ask for a couple of things in there. One is they're optional things, but one is if you're using NinjaTrader to give us your machine ID when you're filling out that form. The other is if you're using TradingView to give us your profile name while you're filling out that form. That just puts you a step ahead. Okay, if you give that information to us, then you'll be able to get you activated for the trial. Even if the trial doesn't begin until the next day, we'll be able to get your indicators activated before the trial actually begins. Okay, and that's really where you want to be. You want to make sure you download the trading platform. Go in here, download the trading platform, whichever one you use. In the room, I use DT Pro, and I also show a lot of the trading view. Today I showed NinjaTrader 2 because, well, today was the day that, actually yesterday was the day that I go through all the different trading platforms, but we had some Ninja guys in there today that wanted to see stuff. So. But anyway, download the trading platform to get the most out of the trial, okay? Now, I finally fixed the stuff down at the bottom. I had to do it yesterday. Wait until the last minute. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. So we finished the month of January with $8,332 a contract, and we began the month of February with just $210. We didn't have a lot of trading opportunities today. I'm going to go through the TradingView stuff. The TradingView had a lot more than the DT Pro did, but I'll show you what we did do, what we didn't do, and what happened. All right. So again, if you're going to read this, you got to read the CFTC risk disclosures down at the bottom. Today is the first day of February 2023. We made 6 ticks in crude and 12 ticks on the ES. Nothing on gold. That put us at 210 on the morning session. Today took 46 minutes and 6 trades to get to the goal for the day. That put her up $160 a contract, and we took a total of 7 trades. So we're only at 210 on February. All right, we're 1 day in. On the year now, we've gotten our goal in 20 out of 21 days. So we've now gone 12 days since our last negative day. That was a blue day. And we've gone 368 days since our last red day. A red day means I ended negative and I never got the goal. Okay. So, all right. So on the month now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, so far this year, you would have had to work 6.68 hours and you would have averaged $422 per hour. Okay, your average hourly rate on the year right now, I gotta make that bold and a little bit bigger. Your average hourly rate on the year right now, not hourly rate, the average daily gain in the room in the morning. Right now is $406.79. Okay, in the room in the morning. All right, that's all that stuff. Now let's get into the trades that did or didn't happen. On gold, we had 1 break-even trade right there, and that was it. I missed a short trade right here, and then it went the leg length, came back, didn't go the full leg length on the first try, but it did on the second one. Okay, it did on the second one, and then it did on the third one. But on this one right here, it didn't go the full leg length. It was just enough to get my stop to break even. It took me out of break even. The context was bearish in here, and then it turned to bullish when I was doing the training, and I trained all the way through to here. All right, and we didn't have any trade setups there. It looks like there was a great trade setup right here during the break. One there, one there. So gold saved it all for the break. Both trades, both nice trades to save for the break right there. Okay, we ended up with nothing on gold. Crude oil, if you can look at this. Look at the crude oil. It looks like it just doesn't look normal, does it? That doesn't look normal to me, the way that it's all scattered around like that. Crude is acting really weird today. And we had just a few trades on it. If we go back to the beginning here, we had a break even there, then a +3 there, and a +3 there. So we got 6 ticks on crude. I missed this short right here, and this was just saying that the context was down before we got into the session where I was doing the training. Then during the whole training, it did all of this, didn't give a single trade setup. Then it got all choppy and sideways all through here. Like, what is this? You can't trade that. And unfortunately, there were no trade setups in there. Then it finally started to move during the break, and it looks like there were a couple of decent trade setups in here during the break. 1, 2, 3 trade setups in there during the break. And then again, it got all mixed up. Didn't give you anything you could do. It's just weird. Anyway, that was crude, and we ended up with just 6 ticks on crude. Okay, and on the ES, we ended up with just a few trades on the ES. We had one here that was a break even. One here that we got 8 ticks on. That's where we got the goal for the day. And one here, this per DT Pro, this is not a trade setup, but I did take this while I was doing the trading view. And I want to go over that with you in just a few minutes. I'm going to go through all the trading view trades that set up because we had so little. We had so little that set up with the DT Pro, but we did have a bunch with the trading view. Dwayne, because I'm made presenter and not organizer, I can't see any questions that are coming in if there are any. Okay. Anyway, okay, so right here, everything, I picked up 4 more ticks there. It was with trading view that I picked that up. Then we get into the break. There was a blue off a blue right here that I didn't do. I wanted to wait until it gave us a little more context, and it did give more context up here, but we didn't have a trade set up, and then it got all sideways, and that's where we ended the morning session. During the break, there was an opportunity here, a short there, and a short there, and one more right here. 3 opportunities on this move down here during the break. All right. Now the trading view stuff, I want to go over that with you pretty quick. Okay. So we'll just start out with the ES. Okay, since we just finished with the ES. The one trade that I did do with TradingView was this move right here. That's where I took those 4 ticks. That was not a trade with DT Pro, but it was easily a trade with TradingView. With the TradingView, all you're looking for is for the black to be in the red, the long-term trend to be down, the black to be in the red, and any bounce off the ribbon when it's like that. All right, over here the black was in the green, any bounce off the ribbon when it's like that, and the long-term direction is up. Okay, here's another one right here. And as it moved down here, you see that it didn't actually hit the ribbon at all in there. I created something last night to help with that. It's called the BBC lead. If you wanted to get those trades, this is still with the rhythm of the BBC. This thing right here is, but it will help you get those ones that don't actually hit the BBC. Okay, I haven't distributed that yet. I'm still working on it. I'm gonna expand on it some, but I just wanted to show that to you. Again, I can't see any of the questions because I wasn't able to come in the proper way. But anyway, right in here, there was a bounce off the ribbon right there. And a bounce off the ribbon right there. And here, when the longer term trend gets flat, you don't want to trade. I don't think there was anything valid in there anyway. Right here, it started moving up in here, so you could take a bounce off the ribbon there and there. Here it was going down, but there really wasn't anything you could do there. Here it was going down. There really wasn't anything you could do there. Okay, here it got long, and there was an opportunity there, and there, and there. Okay, this was all on the S. And here it was all sideways and flat. And let's see. Yes, sideways and flat. That was the S. So the S did give some opportunity here if you're using the trading view. Now this is crude oil. On crude now, anytime the long-term trend is down and the black is in the red, you can take bounces off the ribbon. Right there is one. This was all during the break. You're only looking for the bounces off the ribbon, though. You're not looking for any of the continuation trades. Okay. So there's one there, one there, one there, and there was nothing on the long side. In here, it was all flat. Didn't really want to take anything. In here, the long-term direction was up, so you could have taken nothing, really. Nothing, really. By the time you got the up close, the black was no longer in the green. If you did take that, it would have stopped you out. Right in here, you could have gone long. All 3 of those would have probably been one trade. Right through here, you could have gone short a couple of times. And in here, you could have gone long a couple of times. And short right in there. That was all on the crude oil now, when we hardly had any trades at all this morning. And now the gold. There's this one really beautiful trade right here on gold, where we didn't have anything. We didn't have anything in DT Pro, but you had this beautiful trade right here in gold. That was like picture perfect right there. The long-term direction is clearly down. The black is clearly in the red. It just pulled back up, tapped it, and gave a short. Over here, let me go back to the beginning. We'll work our way to the end instead of doing it the other way around. Okay, so all through here, you're looking for the black line to be in the green and a bounce off the ribbon. So right in here, there was one. Okay, and moving up right here, there was one. Turns around, and right here was that one short. So there wasn't a ton in the gold, but what was there was pretty good. All right, and that's what it looks like on TradingView. Now the slingshot can be used. It's not necessary for the trade entry, but it can definitely be used for the trade management. Okay, and for the continuation trades, you'll need to use the slingshot for sure. But I'll get into that some other time. For right now, let me go back to the spreadsheet. On the spreadsheet, if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the first day of February 2023. Made 6 ticks in crude, 0 ticks in gold, and 12 ticks on the ES. That put us at plus 210 on the morning session. Today it took 46 minutes and 6 trades to get to the goal for the day. At that point, we're up $160 a contract, and we took a total of 7 trades. So on the month now, we are at $210 on the first day, averaging $210. So far on the year, I've gotten the goal in 20 out of 21 days. We've gone 12 days since the last negative day and 368 days since our last red day. And on the year now, we're at $8,542 a contract, averaging $406 per contract per 2-hour trading day. And if you were to quit trading when you get your goal for the day, so far this year, you would have had to work 6.68 hours, and you'd have been averaging $422 per hour for those 6.68 hours. Okay. All right. Now we'll go back here. If you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on this button right here, and it's going to bring you to this registration page. Just fill out this form. All right. Once you fill that form out, you're going to be sent everything that you need to get into the room in the morning. Okay. That's all you have to do. You should download the trading platform. You should look at the trade rules. And if you want, take the time to watch some videos. You get the most out of the trial that way. All right. All right. And with that, I can pass it back out to the fabulous Phoenix, Arizona Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Okay. There's still something off about this, Dwayne. Your audio. It sounds like you're in a tin can. It's not the normal audio that you have. And you made me a presenter and not an organizer, so I can't see any questions. If anybody asked any questions, I can't see them. But there's still something about the way that I mean is Jake. I don't know why that happened. So I'm gonna have to go back and take a look at these things and see if I can figure it out. That is much better. That is normal.
Okay.
Okay, there you go. I can see your screens now.
All right, recap of the recap.
Today it took 46 minutes and 6 trades to get to $160 a contract.
Good job.
Thank you. Thank you.
All right, guys, we've already gone over Logic 247. So now we'll go to the Concierge Trade Alerts, which are different from the Logic 247 alerts, but they work hand in hand. Whereas the Logic alerts are based on current price action and come out around the clock as opportunity presents itself, the CTAs are published once per session, typically right after the Globex Open. Last night, Globex opened at 6 p.m. Eastern, as it always does, and the CTA report was published at 7 p.m. Eastern. Cover all the same markets with the CTAs as we do with the Logic alerts, the ES, the Dow, the Russell, crude, NQ, gold, silver, the euro, and bonds. So we'll use the ES as an example. Okay. When this report is published, let's say you only trade the ES. So the first thing you want to do when the report's published is make note of where price is on your 30-minute chart at that time. And put put some kind of little hash mark so you know that that's where price was. Because price will do one of two things on a typical day. It's either going to get above the BBC and start trending up towards the long target, or it's going to get below the BBC and start trending down towards the short target. Okay. If price is trending up towards the long target, that's bullish, so our strategy will look for opportunities to be long the market. On the other hand, if price is below the BBC and trending down, our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every trading day to yourself be able to find opportunities to be long or short the market. Our goal for you is to become self-sufficient. You don't want to spend the rest of your life depending upon somebody to tell you when to get in and when to get out. You want to be able to look at a chart, any chart, futures, stocks, crypto, forex, doesn't matter. We've told you for years that our strategy and indicators are fluid across all markets and all time frames. And now that we've rolled our indicators out on TradingView, you can see it for yourself. When you go from futures to stocks to crypto to forex. Hold on for me 1 second. Okay. Now, everyone who's a member and everyone who's on the trial got these numbers last night at 7 p.m. Eastern. But this afternoon broadcast is open to the public. So those of you who aren't members and aren't on the trial, you might want to grab a screenshot because these are the numbers that went out last night at 7 p.m. Eastern. Grab a screenshot and we'll go to the charts. Won't take long, and you'll see why as we start out here with the daily chart. We've talked about being hung up at this 50% reverse fib for quite a number of days, and we had drawn a window of opportunity. The other day we said price would probably make it about halfway through the window and reverse, and it did, and it found resistance at the 50% reverse fib. Now we're printing a red daily candle. If price gets below the step line and blue and climbing, then you should expect price to drop right to the daily BBC, which is now aligned with the low of yesterday. Okay. We drew the window in on this day, and then this session took us halfway through just as we anticipated. Back to where we know resistance is. So we got resistance here. If we get above yesterday's high, then we have to deal with the high of January 27th. If we overcome the high of January 27th, then we're looking at the high of 4180. Been in a downtrend since March 29th. That's when the high was put in. The low was put in here on October 13th. The green line is called the BBC. Simply stands for bull bear cross. When price crosses above it, that's bullish. We anticipate higher prices. When price crosses below it, that's bearish. We anticipate lower prices. And as you can see, for the last basically 1, 2, 3, 4, 5 sessions, we've gone nowhere. However, at 2 p.m., when the interest rate decision is delivered, you should expect extreme volatility. Avoid trading. Then the press conference comes at 2:30, where Jerome Powell will take questions from the audience, and that's when the market can get really volatile. Now the street anticipates only a quarter-point rate hike this time, but there's no guarantee that that's what it's going to be. Could be a half, could be 3/4 again. We'll just have to wait and see what happens at 2 p.m. Eastern, when the announcement comes out. But I think more than traders focusing on whether or not we get a rate hike, we know we are, or at least we believe we are, it will be the answers to the questions during the press conference that could create the most extreme volatility. The other indicator you see here, it's called the CFMA1, but I just refer to it as red and falling or blue and climbing. When price is below the BVC and you have red and falling, look for short trades. Price is above the BVC and you got blue and climbing, look for higher prices. When the step line, that's the black line, crosses blue and climbing or crosses red and falling, that's an indication the price is going to attempt to pull back to the BVC. The pullback holds more often than it doesn't. Held here, it held here, it held here, held here, here, here. You get the idea. Here, here. It doesn't matter if it pulls back from below or above. The pullback holds more often than not. Larger the time frame, more accurate the information. On the 30-minute chart, price behaves exactly the same as on a daily chart, as on a 1-minute chart. Price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now, whatever market you trade, it may not be the S&P 500. Maybe you trade crude or gold or silver or Walmart or Amazon or Bitcoin or the British pound. You should spend 2 minutes looking at the daily chart of whatever market you trade before you start trading. Why? Because institutions look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? Their accounts are denominated in hundreds of millions and billions of dollars. The typical retail trader has an account denominated in thousands or tens of thousands of dollars. It is the institutional money that moves price, and it takes financial commitment for price to rise. All that it takes for price to fall or put a red candle is for buyers to simply hit the pause button. And when institutional buyers hit the pause button, waiting for a better entry price, that's when the hedge funds that specialize in short selling come out of the woodwork and drive price lower. So we know where resistance is: high of the day, high of yesterday, high of January 27th, and the high of December 13th. Support, we're sitting right on top of support, both step line and blue and climbing. If price moves below that support right there, then you should anticipate a move down to the daily BBC. And based upon how the market receives the news, we could see an attempt to take out this high. We've had many attempts to break out of the downtrend over the past almost a year now, but each one has failed in a spectacular way. So if we make a run today, and if we were to get all the way up to the 62% reverse fib, that would be something new. Okay? So embrace all possibilities, but trade the reality. And in a news-driven event like the Fed, the best trade is no trade. Let the market digest the announcement. Let the market digest the answers that Jerome gives during the press conference. And then when the market returns to its normal rhythm, that's when you want to go back to trading. Okay? All right. 30-minute chart, flat and sideways, the whole session. Weekly trading zones, okay, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Price is always trying to get to a zone. If price is above the BBC, it's trying to get to the zone overhead. When price is below the BBC, it's trying to get to the zone below. We've published the zones for our members since December 14th of 2009. When you become a member and learn how price behaves around weekly trading zones, because only three things can happen. The zones will become one of the most important tools in your trading toolbox. And as a lifetime member, you'll have lifetime access, not only to the live training room, but the weekly trading zones, unlimited one-on-one mentoring sessions, the logic alerts, the concierge trade alerts, the Thursday night members only workshops, all that and more. So we're below the BBC, we've got red and falling, so the next logical place for price to move is down to this low, where the market defines support, right off this low. It's really important. See, the line, the vertical line here, separates today from yesterday. And so this pullback low yesterday, buyer stepped in and drove the market way up in a 30-minute candle. But where did we find support today so far? This low was 40.62 half. This low was 40.63. So it came within 2 ticks. Okay. Now people will tell you you can't trade support and resistance anymore. That's horse and buggy stuff. There's algorithms and 1,000 indicators and oscillators. And you got to look at the trend. You got to look at the tricks. The more complicated someone can make it appear, the more opportunities they have to sell you stuff, to solve problems that really don't even exist. Price is always going to do one of 3 things. It's going to go up, it's going to go down, it's going to go sideways. Our strategy and indicators are not designed to outsmart the market or to even know the future, because man does not have the ability to change the past or know the future. Those 2 things are inextricably linked for eternity. What our strategy and our indicators show you is what the next high probability move in the markets is. And currently, clear as day, from 40.65 down to 40.63. You'll see that happen right before your eyes. And if we take this low out, then we'll look for support at the weekly zone. Same thing over and over again and again, no matter what market you trade, no matter what time frame you trade. When you move from futures to stocks to crypto to forex, you don't change a rule, you don't change any settings on the indicators, because price flows the same across all markets and all time frames. And when price is snarled up like this, that's when I don't put out Logic 247 alerts. Okay? Price is below the BBC, then it's above. Now you notice it found resistance at the zone, at the zone, at the zone, at the zone. We spiked it right here on the 9:30 open, quickly reversed, pulled back to the BBC, the pullback held, and with red and falling overhead, we anticipate lower prices. So lots of opportunity here to get your goal for the day. And we're still a long way from the CTA short target. On the Dow, this is where the market opened last night. Yesterday we drew in this window of opportunity during the broadcast. That filled and then some. Price pulls back down to the zone, finds support. That's what we expect. When it rallies up to a zone, we expect resistance. drops to a zone, support, resistance, 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 until it finally breaks through. Okay, so down we come this morning. We get below the BBC. We got red and falling overhead. So we get a leg, plenty of room to get your go for the day. Pull back to the BBC and the weekly zone. Okay, we spike the BBC, touch the zone, and then we're another leg down. Pull back to the BBC, then another leg down to the zone. You'll notice as we hit the zone, powerful bounce, hit the zone, powerful bounce, but price is heading lower. Now, why did price stop in this area here? Well, it is the short target, but if you look over here, you see this bullish cross. When a bullish cross leads to an extended move, the first time price revisits that area, it will almost always be good support. Same is true of a bearish cross. At a bearish cross here, and look at how hard it was for the market. It took 1, 2, 3, and then finally on the fourth 30-minute candle, it managed to break through. That's a valuable tool. Once you learn how to use that, that will also become one of the most important tools in your trading toolbox. We didn't go all the way down to test the low of this candle. The point where the bullish cross took place, support, support, and potentially again support. On the Russell, here's where the market opened. We drew this window of opportunity yesterday on the broadcast. Price filled it nicely, and where to find resistance? At the zone. Then we pull back to the BBC, the pullback holds, and then here's the opening candle. There was some initial exuberance. I don't trade or issue alerts during the first 30 minutes of the Wall Street Open. There's simply too much volatility for most new traders. So I'm not going to put out, I only put out high probability, low risk trade opportunities in the Logic 247 channel. That's how we've managed to issue over 13,400 individual alerts. And every week, we've averaged 20% or less of the alerts being stopped out. So we get back below the BBC, we pull up and it holds. Blue and climbing turns to red and falling. We're pulling back to the BBC again. You'll notice this low here is this low here, just like we saw in the ES. Okay, so don't listen to the horse and buggy stuff. Price flows from support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. The 30-minute chart is your roadmap. It tells you which direction the market is trending. Right here, where we got the bullish cross, look at price, step line, blue and climbing, BBC. There was no reason, if you got into this trade along, there was no reason to get out until you saw the step line cross. Okay? Price did manage to go up, but once blue and climbing got directly above price, it became resistance. It's bullish on the way up, but once it turns and gets directly above price, expect it to be resistance, as it was. And so now we'll pull back. We'll find resistance most likely in this area, and then we'll get another leg to the downside. But look how flat the whole session's been. In Q, normally the king of volatility, pretty flat. Okay, we never made it to the upper zone, we never made it to the lower zone. We've not made it to either target. That will change once the announcement comes out. Price starts to drop. Watch this area here as potential support. Okay. On crude oil, here's where the market opened last night. We got red and falling, so we're not concerned about being long. Price pulls back to the BBC, red and falling turns to blue and climbing. This candle opened at 79.30 and ran up to 79.73. It's $400 per contract traded. And price gets below the BVC and it heads right down to the target. This time there was so much selling pressure it took us right through this previous bullish cross. It's taken us all the way down to the target at 77.70. When the price of crude moves $1, that's worth $1,000 per contract traded. So from 78.25 down to 77.70. It's about $500 per contract traded. And then once price traded through the short target, took us right down to the zone. We spiked the zone, and we may have crude's getting hit hard today. Next zone below is way down at 72.85. That's the lowest weekly trading zone this week for crude. Okay. From 77.70 to 76.70, it's $1,000 per contract traded. Gold, we've rolled to the J contract. The market spent most of the night just consolidating right at the weekly zone. Only three things happen at a zone. 70% of the time, this is what you'll see, consolidation at a zone. Second most likely is this, rejection. This was a big green candle all the way up to the zone, but by the time the 30-minute candle closed, the only thing left touching the zone was the wick. That's rejection. Third and least likely thing to happen is called the slice. I'll go into that in more detail tomorrow. Here we got red and falling overhead. We're below the BVC. Price 1935/36 is the zone, and the low is 36.1. Now, each zone is two numbers, 35/36, 43/44. So it came within one tick of hitting the zone. Now we're bouncing back to the BVC and the zone overhead, along with red and falling. We expect resistance here, another leg to the downside. Okay. Now this is what happens on a typical day. Today's not a typical day. As you can see, all the markets are just rolling sideways, waiting for Jerome. Silver. When silver moves $1, that's worth $5 grand. Here's where we opened last night. Price came down to the zone, consolidated for many hours, and then it dropped to the target. The actual low is 23.49, so it missed it by a penny. 2 pennies is $100. This candle right here opened at 23.69. So this is $1,000 per contract move. Price got back above the BVC, resistance at the zone. Remember support, now it's resistance. Price is always trying to get to a zone. When it's above the BVC, it's the zone overhead. When it's below, it's the zone below. And we're still trying to get to the zone below. Got red and falling. Market bounced right here off the target, and now it's headed back towards it again. Okay. On the euro, here's where the market opened. We pulled back to the BVC, got above it. Red and falling turned to blue and climbing. We consolidated for a few hours here at the zone, and then we made the run right up to the target. And then we traded through the target, and then we consolidated again at this zone, and then this high came just shy of the zone. As price pulls back to the BVC, now remember we're talking the euro. We got a US Fed announcement today. I'm sure you can figure that out. Okay. We look for price to pull back, find support right here in this area, give us another leg to the upside. And last but not least, bonds. Here's where the market opened last night. It hit the target, traded through it, pulled back to the BVC, traded through it again. We did get below the BVC for a short period of time, and we found support at that low from yesterday. So now we're back above the long target. And we did not make it up to this high. So that shows weakness in the market and most likely a pullback to the BVC. Okay, back to the daily chart. Red candles sitting on support. You know where support is, you know where resistance is. Again, in 57 minutes, the Fed announcement will come out. There'll be some volatility at 12:30 or 2:30 p.m. Eastern. Jerome will step up to the mic and he'll deliver a prepared statement, and he'll answer questions. That's where you may see the real volatility. Hang on one second. Become a lifetime member with no recurring fees, no upsells, no new shiny objects to buy ever. Go here, eminifuturestrading.com. Once you become a passport holder, takes a couple mouse clicks. The page is pretty self-explanatory. If you have questions, call us at 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail, according to Futures Magazine. But in this article published back in 2006, they didn't say why. And curious minds want to know. So it didn't take me too long to figure out 9 out of 10 new traders fail because they don't have a teacher. Imagine any profession that you might want to follow. You want to become an attorney, you want to become a doctor, you want to become a rocket scientist, you want to become an electrician, you want to become a plumber. You need somebody to teach you how to do the job. Trading has a very low barrier to entry. Put a few $1,000s in a futures account and go print yourself up some business cards that say trader. You'll soon be burning those business cards. Okay? Because what looks simple is, but it's not easy. Trading's not easy, but it can be simple. So we give you a live teacher, 2 hours every trading day, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. Your job is to follow along and trade in your demo account until you qualify to go live per the 2420 blueprint. Your questions are not an interruption. Your questions are the purpose of giving you a live teacher, 2 hours every trading day. The 2420 blueprint will help you write your business plan and your trading plan. 9 out of 10 new traders don't even know that they need a business plan or trading plan. So it was really easy to determine the information Futures Magazine published. So we fixed it. We plugged that hole. Now, along with having access to the live training room every day, you have access to unlimited one-on-one private mentoring sessions. All you got to do is go on the website and book it. The indicators that you'll own for life and the strategy that you will learn are fluid across all markets, all time frames, individual stocks, every cryptocurrency, every forex pair, because price flows the same across every market and every time frame. Why don't more people tell you that? Well, it's quite simple. What do you think will happen? Just curious. Hey, Greg. I think the Fed will make the announcement at 2, and I think there will be questions asked at 2:30, and I think there will be volatility. So if you're asking me, do I think the market's going to go higher or go lower, I think it'll do both. I don't have crystal balls, brother. So that's what I think. It's the best I can give you, the truth. You're welcome. All right. Again, eminifuturestrading.com. Lifetime membership. No upsells, no recurring fees, nothing to buy ever again. You have everything a trader needs all under one roof at one low price. That includes around-the-clock support via Telegram. You're not going to find any of this anywhere else at any price. Feel free to look, but I guarantee you, you won't. All right, let's wrap it up with our good word for the day. Yesterday we talked about forming healthy relationships. Today, in training for better things. Romans 8:28. And we know all things work together for good to those who love God. When Joseph was thrown into prison, it was hard for him to see how this road would lead to the fulfillment of his dream. But it did. That's because God had a plan for his life. And he has one for yours too. Your current job may just be preparation for the job God really has in mind for you. Perhaps not today or tomorrow. But if you stay faithful, like Job, there will come a time when you look back and realize how God directed your steps. Refuse to embrace any concept of victimhood that would steal your commitment, your contentment. Your job, in spite of its difficulties, would have been the dream of some of your ancestors. Didn't you pray for this job you're now complaining about? As difficult as this may be to accept, you're where you are for a reason and for a season. So study, do the coursework, take the tests, graduate, and move on to what God has for you next. There are certain qualities you need to take with you from your present position into your next one. Things like skill building and character development. You may need to learn computer and social media skills, plus patience and gratitude. You may need to learn how to manage an office and how to manage your moods. When you're led by God, no experience is ever wasted. because we know all things work together for good to those who love God, to those who are the called according to his purpose. God knows what he's doing, so trust him. He uses every experience to bring about his will and fulfill our joy. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.